Today, the Banking Royal Commission report public release is delayed. Hello again, I'm Martin North from Digital Finance Analytics. Welcome to our latest post covering finance and property news with a distinctively Australian flavour. We've just heard from the Office of the Treasurer that the final report from the Banking Royal Commission into misconduct will be handed to the government on the 1st of February as planned. However, we also learned that it will not be publicly released until the 4th of February at 4:10 in the afternoon after the markets have closed. So we'll be living in the dark for a few days longer. And I guess that will give them time to react and perhaps prepare a response. And the Treasurer will be giving a press conference on the 4th when the report is released. Now, it's only a few days, but I have to say that I'm not very impressed that this report is being held up. After all, it's a pretty significant piece of work, and we know quite a lot about what is going to be said. So today I thought what I would do is just give you my top 5 picks for things that I expect to see. And by the way, I don't expect the Commissioner will be walking back from his position as in the draft report, despite all the lobbying from the Treasurer, from the RBA and other players. The fact of the matter is, our financial system in Australia is pretty broken at the moment, and it needs a substantial overhaul. And the Royal Commission can provide a significant blueprint for how to make this happen. So I think the first point we should go to is that greed has driven the financial services sector for a very long time. And as a result of that, customers came a very poor second. Most of the focus was on maximising profitability of the banking system, of the financial advisors, and the mortgage brokers, and all of the other surrounding hangers-on of the banking system. And by the way, in New Zealand, they today released a report on the life insurance sector in New Zealand, and they highlighted precisely the same behaviours there. So this is not something exclusive to Australia. This is wired into the way that the financial system works, and that's a problem. The fact of the matter is that customers are seen as cannon fodder to maximise returns. Now, whilst I understand that financial services organisations are commercial entities, they have shareholders, they're driven by returns, nevertheless, they need also to consider the needs of their customers and to make sure that they're doing the right thing by them, because ultimately it is doing the right thing by customers that will ensure the long-term future success of a financial services entity. But turning to be customer-centric, truly customer-centric, is a remarkable turnaround from where most organisations currently are. And my question is, do the executives in those organisations have the nous to be able to understand what customer centricity really means, doing the right thing by their customers? I think this is a big cultural challenge, and many organisations will struggle with it. The second point to make is that I think the Royal Commission will definitely call out the poor behaviour of financial advisors and mortgage brokers, and the fact that they often made decisions not based on the best outcomes of customers, but essentially to maximise returns for the broader organisation. Now, the financial planning sector is already more aligned in terms of best interests, but I do expect mortgage brokers potentially to have a somewhat similar role imposed on them. And I also think there'll be some discussion about whether in fact mortgage brokers should be in a commission context at all, because you could argue that mortgage brokers are essentially an extension of the financial services players, and as such should be remunerated and rewarded for doing that, but not necessarily on a commission basis. So perhaps a fee for service of some sort. Whether that fee is paid for by the bank or whether it's paid for by the consumer is a second question. My third point is that the regulators should come under significant focus. And it may well be that what we really need is a super regulator to regulate the regulators. Are the regulators up to the job? Are they really focusing on the critical issues that need to be focused on? Or are they too close to the banks that they're supervising, to the financial services organisations that they're responsible for? Clearly, the Royal Commission revealed that they were very, very ineffective. Now, it's worth reflecting that David Murray's report 5 years previous made the recommendation that there should be a super regulator that tests to make sure that the regulatory frameworks actually work. But I think there's another question here. Do we have the right structure between ASIC and APRA and the RBA? Are there things that need to be changed? And I'm hoping that the Royal Commission, whilst it may not recommend a particular outcome, will call that out as a significant issue to be developed. The fourth point is a structural question, which is to what extent will the Royal Commission change the law, for example, to do with responsible lending, or to recommend changes to the structure within financial services, particular things like multiple lines of business within one organisation, horizontal and vertical integration. Now, my perspective on those 2 points is that I think the law is actually fairly clear. It might be a bit complicated and they may make recommendations to make it a bit simpler. But frankly, I don't think limitations in the law is the main issue. It's the execution against the law which is the key problem. And that takes you directly to the regulators, of course. Now, when it comes to structural alignment or realignment of the financial services sector, I suspect that the Commission will be a little coy. But nevertheless, my view remains that there is a very strong case to make to separate lines of business and to break apart the vertical and horizontal integration that exists in the sector at the moment. Because, one, it's very hard to manage large, multifaceted organisations, and two, where you actually have end-to-end control of the financial services value chain, from selling and manufacturing through to advice, it's very hard to ensure that you get the right outcomes for customers. So the bottom line for me is simply this, that if we can actually focus the financial services industry on doing the right thing for customers, driving the culture the right way, supporting it with the right culture and the right regulatory frameworks, then we do have a once-in-a-generation chance to really make a huge difference to the way that the financial services industry works in Australia. And I, for one, hope and believe that the Royal Commission's final report, when it's released, will actually go a long way to driving those outcomes. However, of course, it's down to the government to take those recommendations and turn them into reality. But I'm also conscious of the fact there's an election coming soon. So it may well be that some of this gets lost in translation until after the next election. We'll see. Anyhow, I for one will be looking out for the report on the 4th, and of course I'll bring you the latest and greatest news once it's available. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you next time.